Thanks, Ella. And yeah, my name's Claire. I'm the CEO of the Australian Fresh Produce Alliance. And as a CEO or the boss of a thing, I've done what a great boss does, which is outsource. So I would also like to, and kept my name as the person who's delivering it. So I'd like to also introduce you to the wonderful Chris Cosgrove from Sustenance Asia, who actually helped the AFPA in preparing the framework. So what I'm thinking we might do today is just I'll give you a bit of a background on how we got here and what is the framework. And then I've brought Chris, who is the guy who can answer all of your really difficult technical questions and tell you all of the important technical stuff. He can do the hard bit, and then we'll see how we end up. Maybe we'll share that. So just very briefly, for folks that don't know, the AFPA is a member-based organisation. We have 11 members in the group in the Berryland. That's folks from Costa, Driscoll's, Perfection, Pinata, and FPG. I don't think I've left anybody off that list, but members are obviously, I suppose, larger corporate horticulture businesses. And just for context around how we work, because I think it's useful, the AFPA is entirely member funded. So those businesses pay into a central fund. And effectively, what we do then with that money is myself and my colleague Cam, who does all the other real work hiding at the back, we work on evidence-based policy to basically try to move issues forward for members. And the CEOs of each of those member companies is on our board. So the thing that I thought might be useful is to kind of talk maybe a bit about how we at the AFPA and our members have kind of talked about sustainability at a board level. Because I think it's really useful to sort of understand how we've kind of gotten to where we have. Because I really hate talking about sustainability. It just gives me the shits, right? Like, it's so annoying because it's like, what is it? What do we mean? I think Angie Pointer, who sits on the board, of course, of the AFPA and the chair of Berry's, tsunami of compliance and all these things, but like no one will tell us what it means, right? And I think industry really struggles generally when no one will just tell us the thing. It's like, we'll do whatever. Like, we're really good at doing shit. You just need to tell us what you want us to do, yeah? And no one tells us here. So we went round and round and round in a circle at board, and it was so annoying. I was like pretty new at being the CEO, and it was just like a nightmare because no one knew really what they wanted. They just knew that people wanted something from them, and it was this sustainability thing. So where we kind of landed is that, what is it to be sustainable? It's like, well, we care about making money. So it has to be something that still lets us make money. We need to be good corporate citizens, which means we simply must care about the planet, and maybe some of us also feel an ethical obligation to do that. And then people are the most important part. We've heard that in some of the other sessions today about industry, really, and we've got to make sure that support our people in our businesses. And the sustainability kind of lives in the middle of that circle, right? It's this triple bottom line kind of thing, but the vibe of the thing is we need something that fits in there. So then we said, oh, we've got so many problems, right? And everyone wants something from us. But the three biggest problems we have are pressure around packaging, and what we're doing with plastics and recycling and some of the stuff we've heard today. What we're doing about food waste, which is obviously inherently linked to this packaging conversation. And then there was this, what are we doing about emissions? And as the AFPA, we had done very little emissions work. We'd done a fair bit of work on packaging and food waste, which you can come and see Claire or Cam talk about another time. But on emissions, we're like, oh, we don't know anything, right? Board knows nothing. I know nothing. I'm not a sustainability guy. Cam worked in the Premier's office. He knows nothing. We're just making it up, right? So we go on a journey, and it's a 3-part journey that I'll just kind of flip through, right? First one is everyone's talking about net zero, and we're like, no, we don't know what that is. So we get a guy. You go and find a guy who's going to write a paper for you, tell you about it. Most important thing you got to know about this journey is that everyone talks about agriculture emissions. Best numbers that we kind of have from the vibe of the thing is that ag emissions are like 14% of Australia's total emissions, but it's likely that horticulture is a much smaller part of that. So we're like, okay, cool, like we're not that big of a problem, right? So in this whole context of the thing, we feel a bit calmer because we're like a little problem. Then we get this second report from the same guy because we're like, oh, that's a good guy, let's keep talking to him. And we say, we don't know anything about the industry and accounting, we want to understand, can you do a bit of a scan around what data is available? And he does a scan for us and he says, there's no data in Australia. So we say, cool, can we give you some more money and can you look globally? And he says, yeah, cool story. There's actually not globally any data on horticulture industry emissions. Like there's some, right? But it's not awesome. There's no clear methodology. There's not heaps you can learn or something you can just pick up and, run with. So then we say, well, what does this all mean? Because we've spoken to the guy, we know some more things. We realized that no one's going to come and save us. That we keep kind of waiting for someone to tell us what to do, but it's like my dad says this about like getting my life together. No one's going to come and save you, so get it together. And it's like no one's going to come and save horticulture. So there's not anything we can cut and paste. We've got to make it, right? We know that. We know there's just no data. So anyone who's talking about numbers is kind of full of it. Like there's a bit of a vibe of the thing, we know some old research, it's like there's 2% here, but no one knows anything, right? The Rubus data that Marguerite presented is seriously probably some of the more robust numbers that's kind of available. So we know that people are going to make decisions and we got no information and that sucks, right? We're like, oh, well, that's going to be a bad outcome. And then finally, we kind of know this is going to be a thing. Like people are kind of talking about it. Coles and Woolworths want numbers from us. The government want numbers from us. Like it's totally a thing, but we don't really know. We've got to work out what is our role to fix the thing. So we've kind of talked as the AFPA about what's a pre-competitive thing that we can do to fix the thing that we now know is a bit of a problem, that we know we need data, we know we need information, and we know we've got to build a thing ourselves, lest we be dictated to and or sort of left behind. So that kind of brings us to this developing a common greenhouse gas accounting framework, which is not necessarily supposed to be revolutionary, but it's supposed to be a piece around how can we all collectively work on getting the data that we need to make decisions. And that's effectively working out what's your emissions number for your business. Because if we have that and we at an individual level within the AFPA membership, and we've done it in a way that's standardized, like i.e. we've all used the same Excel spreadsheet kind of formula, then I can add the numbers together one day and we can say, well, the AFPA is about half the sector. And if we've got 11 people's numbers and I add them together, it's about half of the sector, right? And then we can start to make some assumptions and we can support suppliers and others to start to do this work. So then I think the really important part of this story, and then over to Chris for what's a framework and how could somebody use it, is that Cam and I spent 4 or 5 months talking to everybody, right? We spoke to so many guys because we're like, we need a guy to do the work. And all of the guys are the worst, right? They all want to come in and do, there's probably guys in the audience, sorry, but they want to come in and do the accounting for you, and the big four will charge you $250,000, and it's just nonsense. And it's like, I just want someone to write down how to do the thing. How hard can that be? And I'm telling you, the amount of time we burnt kicking tires and doing stuff. So for businesses out there that feel lost or stressed, it's really hard to find the guy. So anyway, I feel like Chris is the guy, or at least for us, in terms of being able to write it down, explain it clearly, and kind of not want to go ahead and do all the accounting for us, just set us on a path. So I'll hand over to Chris to do his next bit, and you can see if you think he's the guy, but if not, you can ask him questions to determine that. I'll stand awkwardly to the side, Chris.
Thanks, Claire. That's big shoes to fill. Let me see how we go. So, oh, look at that. I feel like Luke Skywalker. So Claire told me that the industry wants, well, the AFPA wants a common approach to greenhouse gas accounting. And really, it's about just telling us really simply. I can tell you I'm a sustainability consultant, specialised agriculture. A lot of people, a lot of companies make a lot of money making sustainability and climate a whole lot more complex than it needs to be. It shouldn't be this hard. And that's what Claire came to me and said, look, is it really this hard? Does it cost $250,000 to tell us how to do this thing together? The answer is no, it doesn't. The deliverable is a document. It's a 20-odd page document that aims to give a common language. So a lot of the confusion around sustainability and climate comes from everyone using kind of the same but a little bit different language and indicators and metrics. And if you have that, there's no way you can move forward together. Okay, you're in silos straight away. So the approach is to have a common language and common approach for those AFPA members. And Horticulture Innovation has seen this, and they're keen to roll it out to the broader horticulture industry, so that everyone is talking the same language, using the same work, so that stuff can happen. People can measure their greenhouse gas emissions. They can take action to reduce emissions and mitigate against change. And importantly, and this is really, really important, everyone's trying to work out how to do this, right? So climate-related financial disclosures are now mandatory in Australia from this year for big companies. Will be increasingly over the next few years. Everyone's working out how to do it. So if you are confused, don't worry about that, because everyone else is as well. They're making it up as they go, I can promise you. So if the industry can shape a solution to say, this is how we're going to report climate and emissions, this is what we will give to the supermarkets, this is how we will tell the story to government, it allows the industry to shape a solution. Okay, so it's a really, really important piece of work. To the extent that I'm on a reference group that's chaired by the Department of Climate Change and Department of Agriculture to create a common greenhouse gas accounting framework for all of agriculture. And at the first meeting, they literally held up the AFPA framework, said this is what we need for all of agriculture, a common approach that we're all talking the same language. Okay, it's really, really important. The difference is, of course, the feds will take a year and a half to do theirs. This took about 4 weeks, but anyway, it's the concept's the same. I'm going to keep this pretty high level because I don't want to insult your intelligence if you know emissions accounting. If you don't, I don't want to have to put up with this snoring, so I won't go into too much detail. This all comes directly from the common accounting framework that we've put together. So I've just literally cut and pasted some words in here. The audience, the readership of this document is intended to be, if you like, the CEOs and boards. The first couple of pages are just a summary so that anyone can understand what this is. And then the people who are in charge of emissions accounting or sustainability can read the next 18 pages and follow the common approach, right? So a bit of emissions 101 for everyone. Scope 1, 2, and 3 emissions. What are they? Scope 1 is the emissions from your direct assets. Okay, so in farming, it's from machinery or pumps, mechanical emissions, or they're non-mechanical, primarily soil emissions, or decomposition of residues. Fossil fuel, electricity that you buy is your scope 2, and scope 3 is everything before or after your direct assets. Okay, so for ag, it's overwhelmingly things like manufacturing fertilizer, which is a very energy intensive process. That's your upstream scope 3 emissions. Things like manufacturing the substrate, manufacturing the assets that we heard before. That's your upstream scope 3. Downstream is shipping produce to stores, the electricity used to refrigerate produce, that sort of stuff. Okay, so scope 1, 2, and 3, that's what they are. What's greenhouse gas accounting and reporting? Accounting is what it says on the label. It's counting numbers, right? So it's counting the emissions, counting the scope 1, 2, and 3 emissions for your business. And reporting is then, once you have those numbers in one place, to report depending on what you need. It might be reporting a climate-related financial disclosure to comply with mandatory requirements. It might be reporting that data in a sustainability report. It might be going to tell your bank manager. But you count your emissions, then you report them in whatever format you want. So what this framework tries to do, this common approach tries to do, is to let each member, and again by extension the rest of the industry, have a consistent approach so that everyone can account for their emissions accurately, and then they can then use that information, that data, to report in whatever format they want. So how do you do greenhouse gas accounting and reporting? We've based this common approach on the Greenhouse Gas Corporate Protocol, which is a global protocol that's widely used by most companies around the world, and it's what the current mandatory climate-related disclosure legislation uses as well. So there's a core document, and then there's an agriculture sector as well. So they're both about 200 pages. And each of those 200 pages, I'll come back to that. Each of those books has about 10 chapters. And each of those chapters has a number of decisions you need to make. What's this, what's this, what's this? So the common approach we've done just effectively says, look at each of these chapters, let's make a collective decision, the AFPA members, on what we choose to do for each of these chapters. Yep. And so each of the, the sort of 10 pages or so in the framework is essentially a summary of these chapters in a common approach. So by following this common approach, you're directly aligned to what's in the Greenhouse Gas Corporate Protocol. Just really quickly, how does the Greenhouse Gas Protocol fit into other sustainability reporting? Marguerite and others have mentioned this. So there's global frameworks, there's science-based targets, there's different disclosure frameworks. This is a small snapshot. My advice when I talk to clients is really focus on those two dark blue dots, the ISSB climate disclosures and general disclosures. That's the International Sustainability Standards Board, which is a sister entity to the International Accounting Standards Board. So all the accountants in the world who produce financial disclosures, financial statements, they use IASB standards. I think the sustainability world and companies and stuff are going to use these ISB standards as well. And that's what the climate-related disclosures in Australia are based on as well. So choose a standard and just use it is the advice there. So this is what I said before. So basically, if you look at the Greenhouse Gas Corporate Protocol, I don't know if this works, does it? Anyway, you can see down the left-hand side there, you've got boundaries, calculating and accounting reporting, and you've got 4, 8, 10 chapters effectively. Yep. So that is the common approach that's in this document that we've put together. And each of those 10 sections is effectively a chapter in the Greenhouse Gas Corporate Protocol. And each of the bolded things is the decision we arrived at around the table with AFPA members around each of these decisions. So, but if 11 companies were to read the Greenhouse Gas Corporate Protocol, they'd have wildly different interpretations of what to do. Because we've sat around a table, agreed on what we should do for each chapter, everyone will do exactly the same thing. So, for example, the physical boundary is cradle to first point of sale. Not first, not farm gate, as Marguerite said, but first point of sale, yeah, and so on. So there's consistent information there for everyone to take. I think I skipped a few there, did I? Oh no. Anyway, so I won't go into more detail there, but just know that the guidance there follows directly the corporate Greenhouse Gas Protocol. When it comes to reporting data, again, it shouldn't be hard. If you're a grower, effectively all you need to calculate greenhouse gas emissions is the amount of fertilizer you use, the amount of fuel or coolant you use, the amount of electricity, and the amount of pesticides, okay? Those are the key inputs, data inputs. If you all have that, and in using this framework, using this approach, everyone is using the same sort of data sources and the same quality of data, and the same calculator and everything else, then it just works, okay? Couple of slides just to finish. I've spoken about carbon accounting. What's coming next? Well, greenwashing is now as well as carbon. We heard a lot about nature, about waste and that sort of stuff. That's coming next as well, and obviously human rights. So just be aware as an industry, and berry production about that. In terms of what that means, if you look at carbon, the carbon climate disclosures, which are now law in Australia, are based on these ISSB things that I spoke about before. So I think it's pretty obvious that those nature and people sort of disclosures, which has already been spoken about as being mandatory, will follow the same sort of framework. So again, if you're looking at sustainability, if you're new, look at these ISSB frameworks and use them as a basis, okay? I just make the point as well, just to, and I think I'll just finish up here. That's just the fact that no one is doing this well. So if you're new to this and you're a bit confused, that's okay, because a lot of people are. No one is doing this well. So hopefully this framework gives you the tool you need to make a start and get into it. My final advice is just to not to be overwhelmed by these, is to just make it simple, and hopefully this framework does it. This thing does it. Have a common approach. So again, consistency of language and definitions and everything else will remove a lot of confusion and make action a lot easier. And just coordinate impact. There's a lot of goodwill, a lot of resources floating around, but it's all discombobulated. There's a real need for the industry as a whole and the value chain to work together to really identify what can be done and to make a positive impact. So that's it. I'll finish there. Thank you. And any hard questions, go to Claire.
Thanks, Chris. And I would just say you can. I didn't bring any frameworks because of who I am as a person, but you can download them online on our website. And there's both a long form version for anyone who's really into this stuff, and then also an abridged version for anyone who is less into it but knows that it's a thing. So thank you, Berry Quest and Rachel and the team for inviting us to talk about this today. And yeah, any hard questions to Cam. Thank you.
Thanks so much, Claire and Chris. Are there any burning questions?
I'm possibly going to have a job convincing growers that they've got to do this. How did you convince growers to be a part of this process to start with? And do you have any tips for getting people on board? And I mean talking to farmers and getting them on board.
Fear is a really powerful motivator. So I would say for our board, they were afraid of being asked a question they didn't know an answer to, particularly by retailers. I think that was kind of the main motivator. And I think I don't think any of my direct bosses are in the room today, maybe just some of their teams. So you can tell them that I said that. But I think it's going to be really hard throughout the supply chain. So I suppose the thing for me is about how do we make it as simple as possible, right? And to Chris's point, there's like 6 inputs you need. There's a spreadsheet you can plug it into, see what the number says and how that feels, and like then let's just kind of work through it. I think generally in most of the things we do, perfect is the enemy of good, and just giving it a try yourself as simple as possible is often easy. And there are just so many snake oil salesmen, and I think that's also part of the fear and the challenge, is that when you got people running around being like, it's going to cost you 250 grand to do this, it's like, of course people don't want to play the game. So I think keep it simple. The pressure from the retailers will come. It will come in the next 18 months. So fear is a powerful motivator. And the reality is that then other businesses in the supply chain are going to be asking that information. So I think that's probably not like a sexy answer, right? Because no one likes to be afraid, but that's the thing.